China's economy continues its strong recovery. Hello, I'm Anand Naidu, and this is The Heat. China's economy is roaring back with strong growth rates reported for the first quarter of 2023. According to the National Bureau of Statistics, China's gross domestic product grew by 4.5% during the first 3 months of this year, compared with the same period last year. The positive numbers were partly driven by a surge in consumption as COVID-19 restrictions eased. The news is being welcomed for its expected positive impact on the global economy. And to discuss all of this, joining us now from Beijing is Gong. He is a professor of economics at the University of International Business and Economics in Beijing. With us too from Oregon is Liang. She is the Endowed Chair of Economics at Willamette University. Also joining the discussion is Otaviano Canuto, a former vice president of the World Bank. He is now a senior fellow with the Policy Center for the New South. And from Los Angeles, also with us is Patel. He is a global business executive and senior fellow with the Drucker School of Management at Claremont Graduate University. Welcome to all of you. Gong, before we get into the specifics, are you surprised at how fast China's economy has rebounded? I mean, if we look at the numbers here, this growth rate, 4.5% growth in the first quarter compared to last year. I mean, is this growth rate better than you expected?
I think it's a little bit better than expected because, January was still very much with the lingering effect of the COVID. I mean, still cases and there are news of people hospitalized and people dying, elderly people dying. But remarkably, the economy recovered very fast. The COVID thing sort of disappeared overnight. And you go onto the streets in Beijing these days, people are not even wearing masks anymore. The malls are packed, restaurants are being packed. So if you look at the GDP growth in several sectors, the strongest growth is actually showing in hotel and restaurants. That's a very clear sign that the country is putting the COVID behind and people are coming out and spend money. Another very strong sector is in information technology. I think this is one area that has been steadily seeing strong growth over the years, and the country is continuing this trend.
So do you get the sense then, John, that things are beginning to return to normal?
Yeah, actually, absolutely. Things are coming back to normal, and I think it's going to come back to normal for good. I would expect the second quarter will be even stronger. And I'm guessing, I'm actually putting numbers out. It's going to be more than 5%, I think, for the second quarter for sure.
Liang, retail sales rose more than 10% in March. And getting back to what John said a moment ago, I mean, one of the sectors where we had seen growth in the first quarter was in hotels, hospitality, in restaurants as well. And people are also shopping right now. And they're traveling, most importantly. They are getting back into planes and trains and their cars now that the COVID restrictions have been lifted. Can you expand on that? How much of this is due to strong consumption in the country?
Yeah, good to talk to you, Anand. So I think the really surprising or a pleasant surprise for this growth rebound is really the strong rebound of consumption. Consumption accounts for about 2/3 of this growth in the first quarter. So when we look at retail sales, it has gone up by over 10% in March, and in total 5.8% growth in Q1. So I think that shows that the economy is growing because people are consuming. Now, I think, granted, some of these consumption is what we usually call the revenge spending. People were cooked up and they accumulated savings, and now they're going out to spend, which is great. But I think the challenge is, of course, can we sustain that kind of growth momentum in consumption? Other benefits, I think other beneficial factors contributing to growth also has to do with exports. I think that was again, another pleasant surprise that in March that exports have grown to over 20%. And so that also helped to provide extra demand push for the economy to grow. Investment grew by about 5.1%, largely thanks to infrastructure and also manufacturing investment. The real estate sector investment is still at the negative rate of about 5.8%. So overall, I think it's a great sign that consumer spending is strong and help with the recovery.
Right, and I want to get to those 2 points that you mentioned, exports as well as infrastructure, a little later in the show. Right now, though, I'm going to go to Otaviano Canuto. Otaviano, Brazil's president, Lula da Silva, he was in Beijing recently, and the country signed several agreements worth billions of dollars as that trade and economic relationship between the two countries grows. Is the kind of growth that we're seeing in China right now also good news for a country like Brazil?
Yes, it is, because China has become the major trading partner for Brazil. And in fact, Brazil has a trade surplus with China. And of course, the return to growth in China will speed up the demand for things that Brazil sells to China. And also, as you pointed out, there is a series of investments that have been pledged to be done in Brazil by Chinese investors and so on. So this bodes well in the relationship between the two countries. And just to complement what my colleagues have said before, in fact, the exports really surprised the performance, beating all market expectations. And they had to do, of course, a bit with the sales of electric vehicles and also exports to Russia. Probably this is the part of the growth in China that will probably slow down in the second part of the year, because the rising rates of interest in developed markets and the turmoil that we have seen on the banking sector will probably weigh a bit on trade. And this year is a year of recovery for China, but it is a year of, let's say, almost a recession coming from the US and very slow growth for Europe.
So we see better than expected growth for China, and we also see that consumption has driven much of that. But what does it mean for exports from Brazil?
No, it means exactly that the products that Brazil sells, including food and not less so iron ore. One interesting aspect of the Chinese performance, spectacular performance in this first quarter, is that it has happened even though the property woes still persist. The property sector remains under pressure from the liquidity crisis that took place. In fact, the real estate investment fell 5.8%, and the home sales slipped a bit. But the fact of the matter, so this will matter in terms of the composition of the export from Brazil to China. A little much more on food, and less so when it comes to other commodities.
Ryan Patel, there was a story in the Wall Street Journal about the growth that we've seen in China in the first quarter. And it says, the Wall Street Journal says that this revival in Chinese economic growth is expected to lift the global economy as we see growth in the United States as well as in Europe being a bit more sluggish. But if we look at Chinese growth, how much of a ripple effect is it going to have here in the United States?
I think in the U.S., it's obviously going to be hand in hand as being one of the biggest trade partners, a good thing. Now, it's a big statement to say it's got, China by itself with other sluggish going in Europe, it's really hard to put that pressure on China as an economy and the U.S. as an economy to say it's going to uplift everything. I think you're going to see still some headwinds, which will slow some of the growth in the U.S. and China around. I mean, you saw Citi came out and JP Morgan, I think JP Morgan came out, raised China's forecast to 6.4%. Citi came out and said 6.1%. So obviously it was good news, but you also don't want to put pressure on China as an economy as to be able to help save some other countries that are going to be struggling further down the road. And I also think that being realistic with it as well, it's still in the remove of a recovery mode. I mean, sure, it will help, but I think China in itself still has to stay focused on areas to continue its growth. It could get much further than this, and ensuring that you have, you mentioned the China's property sector, which accounts for almost 25% of the country's GDP. So, making sure that downturn is going upwards and building that private sector confidence back up. There could be a lot more opportunity that China could actually have an opportunity by the end of the year.
Yeah, those estimates that have been coming from some of the investment banks have been better than expected. But Ryan, you were talking about headwinds that, China is going to find a little bit of a challenge to try and lift the global economy. These headwinds, what are they?
Well, I mean, you have to start. Well, first, you're talking inflation. You think of Europe; they're not out of the recovery yet. Yes, we talk about the U.S. and they're further along, but I think when you think of the U.S., supply chain issues in Europe, and being able to get recovering, and again, it's back to the currency. So if China's is firing on all cylinders, it's still not going to be firing all cylinders in other parts of the world. Mm-hmm. And then back to China again. I think China is focused internally as well, which, to get back to where it wants to get to, right? Again, this year, the year of recovery, you see high unemployment still persist in the youth. I think as an estimated around 11.6 million college grads are entering into the job market this year. Yeah, the manufacturing demand is going to be a little bit down because of what? The global economy isn't fully recovered, right? So you can't come up with that kind of delta to make that delta. So, like I said, I always look at it the other way. I think there's opportunities, but we're not back to full strength, and that's because everyone else hasn't fully recovered, and China's just starting to get to that recovery mode.
John Gong, looking at these estimates that we've been talking about on annual growth in China, I mean, China itself, it set itself a target of 5%. The IMF actually released a report recently in which it was talking about 5.2%. And the investment bank, Goldman Sachs, they're talking about 6% annual growth. And we just heard from Ryan on what some of the other banks are predicting. Looking at all these numbers, I mean, is China, do you believe, well on its way to meeting or even surpassing the target that it's set for itself?
Well, the government's target was set at a time that actually was still sort of boiled down in the COVID thing. So in my view, it's actually a very conservative estimate. It says the exact wording of that target is around 5% actually. So it also includes the possibility even below 5%. But at this juncture, I think we should be more optimistic than the time that this estimate was made. And I think all indications are pointing to a growth rate well above 5%, I think. And in my view is that it's going to be more than 5% for sure. The challenge right now is somewhat similar to a very common pattern after a natural disaster or pandemic like this. That is something President Biden used to talk about, which is called the forked recovery. In other words, for the rich people that are doing very well, for the poor people, they still need some help. Actually, I can point to one thing, two things actually. One, Ryan's already alluded to. That is the unemployment issue. Clearly, there are still a lot of people unemployed. So that constrains their consumption. On the other hand, if you look at the bank savings over the last 2 or 3 years, it's just shooting through the roof. That means there are people here, they are relatively well off in China, rich people, they have tons of money in the bank. It's a good thing that they're coming out to spend, as Yang Liang said, it's just revengeful spending. That's a very good thing. But I think the expenditures by these rich people and the expenditures, fiscal expenditures by the government need to percolate down to the average folks. People are less privileged. These people need help. These people need to go and spend. I think there's a demand for spending, but the problem is they're financially constrained, and I think they need some more money in their pockets in the bank account for them to go out and spend some money.
Yan Liang, looking at these targets that we're talking about, and as John Gong points out, that initial announcement from China that it would go for an annualized growth of 5% was made at a time when the global economic outlook was not that positive, relatively speaking, as it is now. But we hear a lot more confidence right now. What's changed?
Well, I think what has changed is, again, this recovery seemed to be stronger than expected, and it came earlier than expected. And also, let's not forget, last year, the economy starting in the second quarter was grow at a very low pace, right, at about 0.3%. So that means that's a very low base. So that means this year's growth will be much faster. So I think, yes, it will be well on the way, exceeding that 5% growth rate. And again, like I said, there's still headwinds in terms of unemployment and how consumer confidence may be bolstered, and also that inequality that John has mentioned very eloquently. So I think there's still job for the government to do to try to improve the private sector, to provide targeted credit to small and micro-sized companies to create jobs. And to also provide other employment supports to these young people, right? 11.58 million college graduates. So I think all of these means that there's the room for consumption to grow, especially now the property sector is doing better. The home sales have grown by 4.1%. So there is a positive wealth effect that when people see the housing price stabilize, they will feel more confident to spend. And also when they start getting more houses, homes, they're going to spend more. So all of these are, excellent, I think, sort of momentums. Now, going back to the question about China contributing to global growth, I think it is correct that the IMF has predicted that China is going to account for about 1/3 of the global growth this year. With India, they will account for about half. So that has to do with China's demand for global commodities, China's tourism that spent close to $250 billion, before the pandemic, and China's investment abroad. So all these can help to bolster global growth. Now, the difficulty, of course, is the United States' decoupling initiatives that I think will sabotage that rebound.
I want to get back to one of those sectors that you were talking about earlier on, and that is exports. I mean, what is the outlook for that particular sector? I mean, could it be hindered in some ways by the fact that the global economy is facing challenges?
Right, absolutely. I think what you are seeing here is very interesting that, China's exports to the United States has actually gone down by about 7%. It has gone up by only about 3% to EU. But what really helped was China's exports to ASEAN countries. That has gone up by over 20%. So what it means is there is some structural changes in, China's exporting partners. Now, that said, I think it really matters if, some of these exports to ASEAN countries will remain strong if the rest of the world, especially the advanced countries, are slowing down in their demand.
Otaviano, if we look at the last 2 decades, China has been one of the biggest engines of global economic growth. But if we look more broadly at the global south and developing countries, I mean, how important is it for them that this Chinese economy continues to grow?
Oh, Sian, it has become clear that the decades of historically high 2-digit growth rates of China pulled up a substantial part of the other parts of the South. I myself published a book in 2010 showing up how the global South as a whole was becoming, let's say, a new locomotive of the global economy. And the performance by China was quite important in that regard. And that's why, as we entered in the new decade, when naturally the growth rates of China started to slide down during the rebalancing, the concern was whether exactly that engine of growth would disappear. That's why it is important that after, let's say, such a hard period of growth-wise, like the last year, now China returns to a higher, pace of growth, because that tends to pull many other countries. One point that I would like as well to add is the following. Look, good news is that the urban unemployment rate has fallen to 5.3%. But of course, there is still remaining the issue of employment of the Chinese youth. That's let's say, a major challenge to, if China copes with that, it may even speed up the growth rate. And also I'd like to highlight a central bank survey that was conducted at the end of February, which showed clearly some signals of improved confidence by households, which matters a lot. And the credit data are coming in strong with the private sector credit growing as well. And this also, let's say, fuels up the recovery of China along this year.
Ryan Patel, we were talking a moment ago about the D word, decoupling, and in fact the Treasury Secretary here in the United States, she made a speech recently in which she warned about the risks of decoupling the Chinese and American economies. Let's listen to some of what she had to say.
The United States will assert ourselves when our vital interests are at stake, but we do not seek to decouple our economy from China's. A full separation of our economies would be disastrous for both countries. It would be destabilizing for the rest of the world. Rather, we know that the health of the Chinese and U.S. economies is closely linked.
So, Ryan, do you get the sense that there is a growing realization in the business community here in the United States right now that, decoupling, as Janet Yellen points out, is going to be a disaster for both countries?
Oh, I mean, the ones that are real in the business communities have known this for a couple of years for when you talk about these trade wars, right? When we were talking about that, Anand, between you and I a long time ago, that you couldn't have this. I know we've been optimistic, and Anand, I'm always going to tell how it is. When we think of these growth numbers out of China, the thing that, not worries, but the things that maybe in a couple months from now, or if there is a downturn in the GDP growth for China, it's going to be the tensions, the global tensions that are around this, right? IMF had said that if these two countries are just politically aligned, that the world's two largest economies, supply chains start to shift, we're talking about a loss of 2% of GDP. And, and that obviously is that fragile. I think the global scale, not just between the U.S. and China, that's some rhetoric that I think maybe brings both back to the table from Janet Yellen and find ways to do this. But you and I know when there's more tension around globally and the U.S. and China are put in, it does put some pressure on the GDP growth of both countries, and we've seen that. And so, again, I don't have a magic ball to say, hey, this is going to go down or not, but that is what, if there was a wild card in this place, until you see some more stability behind it, we could have a very same conversation, unfortunately, a couple of months ago and go, well, the projections might be a little bit lower than we thought, and that's why I think China also put the number at, we think it's around 5%, given that room, because you just don't know how fragile the systems are right now.
John Gong, what are your thoughts on those sentiments that were expressed by Janet Yellen? It appears to be a marked difference from the kind of belligerent rhetoric we've been hearing from other members of the Biden administration, or for that matter, from members of the United States Congress. What did you make of it?
I interpret her speech with two possibilities. One, of course, is that there's some internal division. Janet Yellen holds a different view from Jake Sullivan, for example. That might be the case, but it's a small possibility, I think. The more likely case is probably some backpedaling on the part of the Biden administration. I think there's some realization in Washington that what Jake Sullivan has been doing is going too far, to the extent of starting to damage the interests of corporate America operating in China or engaging in trade between the United States and China. But nevertheless, I think the overall trend is not going to change. We can argue about what exactly decoupling means, its exact definition, but overall, trend is towards the relationship between the economic relationship between the two countries more and more affected by the national security angle. Janet Yellen does mention, this national security issue here. Yeah. But the problem is that national security is just, the scope of national security gets more and more expensive, much, much broader. Now, the problem is that I think, this is a fundamental problem. Both countries have huge differences and confrontation on the Taiwan issue. So I think Washington is basically preparing for a war in Taiwan, in response to a war. And when that happens, everything in trade becomes a national security issue. Right. So so in that context, I think it's very difficult to make a clear distinction between decoupling and normal trade relationships,
right,
still in consideration of national security concerns.
Okay, Liang, we are rapidly running out of time, but I do want to talk about Europe, and I'd be grateful if you could keep it brief. I mean, Europe, of course, a huge trading bloc, and recently we have seen the German Chancellor go to Beijing, and more recently we saw Emmanuel Macron, the French president, go to Beijing as well. I mean, how important is the Chinese market for Europe?
Well, I think it's very important, and I think it's very unhealthy to do what the United States is doing, which is, in the name of national security and value, to try to decouple, and that trade fermentation, technological fermentation, capital flow fermentation, all these would cost dearly to the global GDP. And I think Macron really emphasized that Europe needs to have their own strategic autonomy, right? Not to simply follow the United States policy needs or their own, national interests.
Otaviano, the IMF recently warned that the world is entering a very perilous phase right now as economies are battling inflation, and of course they're also battling high interest rates. So what is your assessment of the health of the global economy right now?
Well, look, the major terrible consequence of an aggravation of the geopolitical tensions might be a fragmentation of the global economy, the unwinding of the kind of integration that came with the global value chains and so on, and the more we go that road, the higher the presence of supply shocks and inflation, as well as the damage made to GDP of the global economy. So it's important to highlight that we have a wide span of possible scenarios, even though of course, there is a continuity in the geopolitical stance of the United States government from Trump to Biden. In the Biden's government, it seems to be more located into high-tech sectors deemed as national security sensitive and so on, whereas Trump's trade movements were on a broader base and even backfiring. It's important to note that some economists of the Federal Reserve Bank highlighted the damage done to the U.S. manufacturing industry by the kind of trade war that Mr. Trump implemented.
Okay, we are going to have to leave it there. Time has caught up with us. Thank you to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidu in Washington, D.C. Thank you for watching and have a great weekend.
The nature of business is to bring value. Business activities in Europe, Asia, and the U.S. reach consumers globally. Trade, manufacturing, energy, high-tech, real estate, consumption. We give an expanded view on global business and how it covers, influences, or relates to the whole world. Global business, only on CGTN.